Hey everyone, Ivaylo here from the Stoyanov Group, and in this video I'll be doing a 2020 year review highlighting some of the factors that affected our real estate market in 2020 and what we can possibly expect in the 2021 market. Now, it's been a wild year of real estate. It's difficult to think that all the way back in the beginning of 2020, as it feels like it's dragged on for an eternity, and at the same time like we're stuck in a March quarantine time loop. Now, despite the fog of a year that we've had, plenty has happened in real estate. You could say that this year has been one of the most surprising and exciting years in quite some time. Now, going into the 2020, many experts predicted that the real estate market was long overdue for a crash. After all, we've enjoyed over a decade of steady growth in Toronto and the GTA areas. Now, of course, we know that despite the economic recession, that housing market of 2020 defied every expectation. So what happened? Now, interest rates were and continue to be at historical lows, which played a significant role in the health of the real estate market. Now, namely in sustaining demand. Of course, these interest rates were a major incentive for home buyers and investors to seize the opportunity to acquire new properties. In many ways, the continuation of low interest rates throughout the year has been a major contributor to sustained real estate demand, despite the year's unexpected economic and social challenges. Now, interest rates were not the only motivator we saw in home buyers. The pandemic was something no one seen coming, and there was no telling how the market would react. The immediate reaction in the real estate was a sudden retraction. We saw homes taken off the market, and all along with the same sales stall. Now, thankfully, the market quickly bounced back from its grinding halt for two major reasons. The incentive of interest rates combined with shifting homeowner and rental resident priorities. We saw a surge of demand for single-family homes. Now, this growing demand was largely influenced by the pandemic, highlighting a need for more space between neighbors, square footage, home office space, and outdoor areas. Not only that, but the work from home trend, both temporary and permanent, incentivized some people to move out of crowded, expensive markets in exchange for a more spread out suburban lifestyle. Now, with tight inventory still an issue, this naturally created a rise in housing prices. Because supply is tight and demand has been unstoppable, it's unlikely that we'll see a state of hyper supply or collapsing prices anytime soon. Now, of course, we also must take into account the economic as a whole and where things might be going. Analysts are predicting a steady increase in price this year by 9.6% across the GTA, with freehold properties obviously leading the way. Now, this, of course, can change the economy, takes a turn due to a long-term closure and no government financial help, causing homeowners to increase supply. One thing is for sure, that 2020 is going to be an interesting year, and analyzing the numbers on a monthly basis is going to be super important. Now, thank you so much, guys, for joining me today, and if you have any questions, never hesitate to reach out. And as always, if you or anybody you know is looking for a great real estate agent, give me a call. I'd love to help. I hope you guys are staying safe, and I really look forward to connecting with you guys soon. All right, take care. Cheers.